We're going to do a brief video of Snap stock, Snapchat stock, and we're looking at a one-day chart here with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. Let's back up here just a little bit and scrunch this together. We can see we made our highs back here in later September of 2021. We had a huge gap from about 72-ish, 73-ish to 60, and we broke below the 200-day moving average. That put us firmly in a bear market where we've been ever since. And this is a great little view of this chart. You can see that we came down in a strong bear market and got too far away from the 200-day moving average. We had a correction, which was essentially a sideways movement, oscillating around $34 back and forth until we got close enough to this 200-day to establish some kind of normalcy, and then we broke back down again. Same thing happened here. We came down. We had a huge gap at 21 all the way down to looks like 1450, and same thing. We then moved sideways, too far away from the 200-day moving average, and moving sideways here. I'll zoom in on that in just a minute, but what I want to show you is when this stock gets too far away from a 200-day moving average, in almost all stocks, you're going to see them go sideways and either rally back up to the 200-day or break down further. But they have to kind of maintain this volume area. When they get too much volume between the 200-day and the stock price, you can bet on a rally. It doesn't always happen, but we've built, RM Research has built statistical models, and it shows us you can build trading systems just on that fact alone. So keep in mind what we're seeing here, even though it really doesn't look like it, is a continuation of the pattern we saw here. That's a gap, a breakdown, too far away from the 200-day, a movement across, and another breakdown. So let's zoom in on the breakdown. As you can see, in this view of this 200-day moving average, we're just now starting to not flatten, but just start to change our slope a little bit. It's not so aggressively down. So we are getting some moderation in the rate of change of the moving average, and which is an indication that this is slowing up. So we're seeing the price, in my opinion, come a little bit further sideways than we would have normally expected. We can see we've essentially been sideways from May all the way to the end of July, and then a drop here that we just discussed, this big gap, and then sideways from the end of July all the way to the beginning of September now. So also you'll notice that volatility has dried up. Daily range right now is less than $1. Up in here, daily range was as much as almost $2.50 to $3. That would be per day. So the daily range has collapsed on this stock, meaning daily volatility has collapsed on this stock. So what do I see for the future of this stock? Right now, I don't see a whole lot of energy in this stock. It's a kind of the energy's been drained out of it, which is unusual when you would think that stock gets to its bottom. You would think that a stock would begin to have some wider swings as it progressively works itself back up to test the 200-day moving average. We're not seeing that, and partially the reason I think we're not seeing that is these gaps. These gaps take the starch out of people trying to pick the bottoms, because the amount of money you can lose in a gap like that is just tremendous. Gaps usually fill themselves. You'll notice this gap right here filled itself eventually. Gaps usually fill themselves, but in the meantime, it really takes the starch out of people trying to pick the bottoms. So when you have a long flat period of time here, this is essentially May 24th, and we're now at September 7th. When you have a long period of time like this, these moving averages become useless. They're just not telling us anything. And so the unfortunate fact is, even for entertainment purposes only, I can't really give you a projection of this stock right at this moment. It's just too flat. It's not, the volatility's dried up in it. If I just had to absolute, just guess, just to say something, this stock could easily go, much lower. I'm not projecting that, but I'm saying this stock could easily go much lower simply because I don't see a whole lot of support coming in for this stock, even at this low range. In addition, I don't see a whole lot of chance of a huge rally right at this moment. I don't see the energy for it. So I hate to say it, but this is kind of a dead money stock right at the moment. Personally, I would stay away from this stock unless I had some particular reason to get in it. I would stay away from it in the short term, just until I could get a better visibility on what was going on in terms of the energy. I'd want to see an increase in the daily range to at least $2 a day, and I'd want to see right now it's about $1, and I'd want to see it showing me what it's going to do. Is it going to go down further, in which case maybe you take a short position on it? That's up to you. Or do you want to maybe buy and hope for a rally up in this 20 or low 20 range, testing the 200-day moving average? So either one of those are possible right now, but you can't really tell using moving averages. Let's go down and take a look and see what RBAM Research says. We do follow this stock. Let's go down and see what it's talking about for today. It's saying Snap, and for entertainment purposes only, it's saying Snap is a buy on a 1-day at 1038 and a 20-day at 1069, 5-day 1054. So let's take a look between 1038 and 1069 and see what's going on. If we can expand this a little bit. It looks like it's trading between 1072 and 1129. So 1072 and 1129. So it has not get into our prices yet. So again, these are all for entertainment purposes only. You can only use them for entertainment. You have to use your do your own analysis, but it has not gotten into our prices yet from RBAM Research's algorithms. These come out every morning by 7 a.m. These are out for today. These are current prices for the 7th of September. These are buy onlys, and we do 3 columns for stocks. We have a 1-day, a 5-day, and a 20-day hold. Would be buy today, close out worst case at the end of trading tomorrow at a loss. Same thing for 5 and the 20, buy 5, buy today, close out worst case 5 days at a loss, or take your profits sooner if you get them. And that's the way this algorithm works. You can get all of these by 7 a.m. absolutely no cost, no credit card required at rbamresearch.com. We cover, in addition to the 190 stocks I just gave you a glimpse of, we cover the major forex pairs, we cover BTC for crypto, and we cover the most liquid futures. Everything but the stocks, we have long or shorts. The stocks are currently just longs. Again, 7 a.m. every morning, Monday through Friday, rbamresearch.com. There's a link in the description below. You just go there and sign up, absolutely free, no credit card required. If you like this video, please click the like button. If you want to see some more, please subscribe. If you have some comments on how we can make these videos better for you, please leave a great comment in the comment section below. We'd love to hear from you. And keep in mind that everything you see or hear in here, including entry prices, are for entertainment purposes only. You have to do your own analysis. You can't use our entry prices for anything other than entertainment only. Of course, it's all our opinion, and you have to trade at your own risk.